What is going on, everybody? Welcome back to another CYPRX video banger. In today's video, we're going to be diving into fundamentals and video breakdowns, i.e. panel discussions, discussing and talking about the forward projecting outlook and DeFi developments set to take place as we head into 2025, and why it's so important that you all pay attention to DeFi developments and educating yourself about the DeFi ecosystem, how to participate in yield generating strategies. As we head into 2025, it is going to be one of the biggest niche categories in the crypto ecosystem. You are not going to want to miss today's video breakdown. So welcome back to the platform. We do appreciate the love and the support. Before we dive into today's video, we need to understand that as financial institutions are starting to dip their toes in the water and slowly onboard into this digital asset ecosystem, the vast majority of large financial institutions are not here yet and are sitting sidelined, i.e. remaining dormant because of lack of regulatory clarity. And once that regulatory clarity is lifted, we are set to see a massive inflow, i.e. a tsunami, we'll get into that in just 1 second, of capital inflows into this digital asset ecosystem. But don't take that from me. Take it from the head of crypto research at Signum, discussing and talking about how large financial institutions to a large magnitude are not fully here yet. Take a second and listen.
We are only actually seeing, you mentioned we have seen quite strong institutional inflows already this year, but we are only seeing the beginnings of this. It is the very first traditional financial institutions that are starting to make percentage allocations to crypto. We are very early in this trend.
So I wanted you to hear that from someone with many more credentials than myself. I know that people hate hearing we are early, but it's very important for you all to understand that we have a key advantage as retail market participants right now, that we don't have a lot of regulatory restrictions sidelining us from participating in opportunities in this space, opportunities like DeFi. And we know, based off of reports like this that I've shared publicly to you guys on X, for example, this is a Galaxy report, i.e. a large institution, where it's titled, and it's from this year, September 2024, the digital asset investable universe. And just looking at some different key highlights, they mentioned that this ecosystem, i.e. the crypto ecosystem, is no longer a niche or speculative corner of the financial world. It is a dynamic investable asset class with the potential to shape the future of finance. And to go a little bit deeper, it says 94% of institutional investors believe in the long-term value of blockchain and or digital assets, and 56% of Fortune 500 executives say their companies pursue on-chain projects. That is massive, considering what Catalin just said about how institutions aren't really here yet. Only a few large institutions are slightly dipping their toes in the water. And so you have to assume that over the next consecutive couple of months/years, we're going to see exponential growth as this ecosystem continues to mature. And DeFi is going to play a major role in that. So let's jump over to this. We've been advocates of discussing and talking about DeFi on the CYPRX platform. If you're new to the CYPRX platform, this is your first time hearing about DeFi or watching one of our video breakdowns, make sure that you go back and you educate yourself by watching our yield playlist. Go to the CYPRX YouTube, click our playlist tab, and then find the one that says yield, and watch like the 20 video breakdowns that are in that, and it'll truly enlighten you and also blow your mind on the opportunities that we now have as retail investors to participate in this space. And look at this article right here from December 24th, 2024. What is next for DeFi in 2025? Decentralized finance, or DeFi, will hit an inflection point in 2025 as Bitcoin staking, real-world asset tokenization, and agentic artificial intelligence catalyze adoption, several industry executives told Cointelegraph. And it just talks about how they expect the TVL and the DeFi ecosystem to significantly increase in 2025. Here it goes on to say, by 2025, DeFi infrastructure and blue chip protocols will have been operating at scale for over 4 years. Jacob Phillips, Bitcoin staking protocol Lombard's co-founder and head of strategy, told Cointelegraph. These platforms will become reliable venues for institutions and new users putting Bitcoin to work. Okay, now again, this is not just a Bitcoin-oriented video breakdown. This is an entire DeFi ecosystem video breakdown, where the DeFi ecosystem is maturing at a rapid pace in such a way where these financial institutions over the next 8 to 12 months will become comfortable onboarding into not only the crypto ecosystem, but into the DeFi ecosystem, earning yield and passive rewards on their digital assets, which is why it's so important that you guys understand how to do this. Because once these institutions, if you think for just 1 second that these institutions are just going to come into this space and hodl their assets, you're dead wrong. They're going to come in. We've been advocates of trying to show people that this is happening. They're going to come in, buy up these assets at cheap. Okay. They're probably, again, maybe a certain portion of institutions are going to sell them, but a large portion of these institutions are going to hold them and earn yield on their assets and offer these solutions to their clients as well. Now, back to the maturation of the DeFi ecosystem. Check this out. This is from just 7 hours ago, and it says DeFi hacks dropped 40%. That's almost half in 2024. However, CFI breaches surged to 694 million. DeFi losses dropped 40% in 2024 as advanced security measures strengthened protocols, while CFI breaches surged to 694 million. Decentralized finance experienced a 40% decrease in dollars lost to security incidents from 2023 to 2024 due to improved protocols and stronger bridges and advanced cryptographic measures. Why is this so important? Because there's so many investors in the crypto ecosystem that won't touch DeFi because they think it's so nascent and new and it's so susceptible to scams and hacks. And it is, don't get me wrong, but now we're clearly seeing a massive maturation in the DeFi ecosystem. And this will only continue to improve as time progresses, which is yet again another reason why you should pay attention to DeFi developments and not ignore, at least at a minimum, educating yourself about how to get your digital assets working for you in the DeFi ecosystem. Maybe you're not ready to deploy in the DeFi ecosystem now. That's absolutely fine, but there's no reason why you should ignore furthering your education. If you guys want a deeper education on the DeFi ecosystem, head over to CYPRXtrading.com, tap into the Wealth 28 Club DeFi University, and educate yourself now while this ecosystem is in its maturation phase so you don't get left behind. Now, let me show you guys physical proof. Let's jump over into the panel discussions today via the representatives that I have to show you all, where we have individuals not only mentioning that financial institutions are dipping their toes into the water, but that over the next 12 months, financial institutions will most likely adopt liquid staking options. We're going to jump into the regulatory dam that is holding institutions back, possibly being lifted over the next consecutive couple of months. And then a very large market participant in the DeFi ecosystem, the Aave founder, mentioning that they expect by 2030 all of finance to migrate over to decentralized financial ecosystems. And that is just so massive. So stick around for that. So let's tap in this first video clip. I'm going to play two back to back. This gentleman on stage mentions that institutions are starting to understand this technology, i.e. they're talking and discussing about DeFi. You can see the title of the video is titled "The Future of Liquid Staking." And then he mentions a time frame of anywhere between 12 months until institutions consider liquid staking, which just kind of coexists with what the individual representative from Signum mentioned, that large-scale financial institutions, albeit they're interested in this space, are not fully here yet. Right. And that's important because, again, it shows opportunity that we here as the average retail investor have the ability to front run the banks and adopt these technologies before the financial institutions come in and drive the prices up sky high, pricing everyday average retail traders out. Take a second here and listen.
Front, but we try to enable that with technology, right? And so the better the UX and the front end is, the more adoption we see, hence why Lido has been so successful, right? Easy front end, 2 clicks, stake, deposit. You get the synthetic token in return. You can deposit in DeFi. I would say the UX on the institutional front is still in development, but we're seeing institutions that are starting to figure that out as well. How to distribute these type of products, whether they do that through more TradFi routes, think about, wrapping it in ETF and other structured products, or whether that's like enhancing their platforms such as easy custody, easy click point stake. These are the things that will enhance UX and adoption for staking through the whole spectrum, in my opinion.
And I think there's also a significant regulatory barrier, at least in certain markets like North America. So, for example, the ETH ETFs, which have recently been approved, don't have staking yet approved. That'll happen, but I think we're still a while away before you see at least TradFi institutions consider liquid staking. It's just there's still, for the non-crypto native institutions,
so we'll pause it right there. He mentions anywhere between 12 months before these financial institutions, due to regulatory requirements, consider liquid staking, but it's coming. And that's the important part that I was trying to get you guys to hear, is that we are still early. That is why over the next, I just say 8 to 12 months, it should be your main focus, from my personal opinion, to learn how to get your digital assets working for you, acquiring and accumulating blue chip digital assets that we can utilize in the DeFi ecosystem to provide us passive income, taking assets like XRP, Bitcoin, XLM, Hbar, and utilizing them in the DeFi ecosystem to generate passive rewards, so that way we never have to sell for fiat. Why, on your right mind, if you can take your XRP and you can generate passive income with it, would you ever want to sell it? Most people don't even know that that's possible to this day. But again, it requires a firm understanding of the DeFi ecosystem, understanding the risks, and understanding the strategy in DeFi that you can utilize and implement to earn passive rewards. And that, again, requires education on your behalf and elbow grease for you to take initiative and learn this stuff, which is, again, why we created the Wealth 28 Club, to show people how we are exposing our capital in the DeFi ecosystem. So now that you guys have heard that, he mentioned the regulatory wall holding these financial institutions back from participating in things like liquid staking. Take a second and listen to this individual mention that a tsunami is coming once regulations are clear.
I think the from an institutional perspective, right, the success of staking, liquid staking, restaking is going to be very dependent on regulations, right? And so we have discussions with regulators all around the world, from Japan, Hong Kong, Singapore, to Switzerland, Germany, France, the US. And the big hurdle is still education, right? Sometimes regulators don't even know, or don't even try to know, the difference between lending and borrowing, and staking, liquid staking, restaking. So in my opinion, we're still far away from TradFi and regulators fully embracing this. So I think we're not even like seeing the first big wave, and there's a way bigger tsunami coming, let's say, when the real institutions and the regulators start to understand and hopefully unblock many of the restrictions or
There's a big tsunami coming once the regulators and the larger financial institutions understand this. And do you guys remember that little tiny video clip I played of an individual representative on stage? I constantly play this, and these little tiny gems click for me, and I hope they click for you, of him mentioning that smart money will not leave the opportunity on the table to lend, to borrow, and to participate in this DeFi ecosystem.
Yeah, there's really no digitization, blockchain or otherwise. And so I think it's only a matter of time until you can perform those other functions, lend, borrow, provide liquidity to facilitate trading, these types of things, which also enhance your returns. Yeah. Right. So by making it composable, now you can actually boost your return on top in a fundamental way. Yeah. And so I don't think, smart money is going to leave that on the table once they understand the mechanics.
Right. And now he mentions a tsunami coming once regulatory clarity is clear. Now let's go back to Paul Brody, where he discussed and talked about all of the money coming into this space, the trillions of dollars, once the regulatory dam is lifted.
Now, is it worth anything? Yes, right? This part of the conversation is called the Great Liquidity Reservoir, and I am going to struggle to convey just how much capital there is behind this regulatory dam, because the numbers are just monumental, right? How much money is there? Well, let's start with the most liquid of the liquid, right? Bank deposits, stocks, and bonds. $400 trillion, right? Certainly more than my current retirement nest egg, and plenty of money to buy you a nice place in central London or San Francisco, right? 400 trillion. There's another 379 trillion in real estate, right? Gold is 13 trillion by itself. And then you get to the entire crypto ecosystem is like 2.5 trillion, right? I'm not going to say all of this money is going into crypto, but quite a lot of it will end up in crypto.
Right. So you all heard it there. So you have individuals on stage mentioning that financial institutions are not here yet, but they are dipping their toes in the water, and they are starting to understand this. And we've also heard market participants say that they're not going to leave this stuff behind, that once regulatory clarity is in place, that a tsunami is coming. You have other large market participants like the global blockchain leader EY saying the same exact thing, that hundreds of trillions of dollars are going to come flooding into the space once regulatory clarity is firmly implemented. Now, let me blow your mind even further. This is Avari Stani Kolchev, hopefully I'm pronouncing that correctly. He is one of the co-founders, or if not the founder, of Aave, which is one of the largest DeFi platforms in the DeFi ecosystem. Listen to what he says here about how they perceive all of finance to be operating on DeFi rails in the near future by 2030. This is so massive. Take a second here and listen.
That's fair. So let's talk about this vision for 2030. You guys are building your 4th version. You have this Aave 2030 idea. What are you guys going for there? What's the big concept?
I mean, the main thing is that Aave is known always about the innovation. So we really want to build this technology and get it into mainstream. So we want all finance to exist on top of DeFi and specifically on top of Aave. Anything that is resilient and better technology. And Aave 2030, we're building, the main initiative is to build the V4, and that aims for bringing better tools for risk management and improving the capital efficiency.
Now that's massive. That is such a massive statement. We want all of finance to exist on DeFi rails by 2030. Now, even though that might not come into fruition, it's still a massive statement and has gone readily unnoticed. This video only has 108 views. So again, the reason why I'm trying to project this to you guys is because we started with this fundamental piece talking about how DeFi is going to see exponential growth over the coming years. I've also shown you guys physical proof that large market participants expect over the next 12 months, financial institutions to start participating in the DeFi ecosystem. And we're hearing large market participants in the DeFi ecosystem expect all of finance to transition over to DeFi by 2030. That is so massive. So with that being said, I hope that this video breakdown has enlightened you all on why it's so important that you all should pay attention to the DeFi developments in this ecosystem as we head into 2025, that DeFi is going to be one of the biggest niche categories that is going to see exponential growth as we progress throughout the year of 2025 and heading into 2030. We are only going to see continual DeFi developments scale at an exponential rate. With that being said, as always, none of this is financial advice. Always make sure that you guys are doing your own personal research. If you guys want a more in-depth experience and you actually want to learn the ins and outs of DeFi without having to take your own research approach and surf the internet for all the correct information, head over to CYPRXtrading.com. Tap into our Wealth 28 Club. We'd love to have you on the team. With that being said, make sure that you're subscribed to the platform, smash that thumbs up button, and I will see you guys in the next video breakdown.